Hello, everybody. Welcome to the show. This is Trading with Livevol. This is where I trade my real Reg T account, and I use LVX and show you guys how I use the software to trade. So let's just go to my account. Nothing much going on really. Pretty flat except for this Tesla that I have a spread on, which I can talk about a little bit. So in Tesla, I saw this trade go up a while back where the person bought the SEP 210 calls and sold the June 190 calls. I liked the trade, so I did it for even, and then when Tesla went up, because Tesla went up a little bit going into earnings, I did it one more time for a $2 credit. I did that because in conjunction, I did that with my Facebook trade. So I did this trade just in case these are in the same, I grouped them in the same category, Tesla and Facebook. So they're like growth stocks that I personally kind of like. I'm not sure about Tesla as much because the valuation is pretty crazy, but so I sold. I was kind of thinking, like, with all the momentum stocks kind of selling off, that it didn't look like they sold off too much from their highs versus the other momentum stocks. So I was kind of looking for a trade, and then when that person did that spread, it kind of appealed to me because I still have the upside. But if I get away with it in June, these could theoretically expire worthless, and I would have actually bought the September 210s for a credit, right? So I like that trade. But that was coupled with Facebook, where I have also a spread where I own the SEP 65 calls and I sold the May 65. So I'm going to sell the 65s every month, and hopefully I can recoup some of the spread. So I did the spread because the guy did it for $3.55. It looks like Facebook is down about $4 or $5 since he put this trade on, but as you can see, it's still you know, maybe you're down a dime or something, right, from that trade. And you know what I was thinking is once those expire, I'll try to sell these, right? Not the June 21 65s for like you know, maybe like 93 cents, and I'll just keep rolling June, July, August, and by the time September rolls around, I would have bought this for free. Right, but if Facebook keeps going down, that's not good, right? So I was thinking, like, okay, if it keeps going down, I'll make money on Tesla, and I'll lose money on Facebook, and vice versa, right? But today is kind of like one of those days where it worked out in my favor both ways. So Facebook is up because the general market is up, and Tesla had, you know, I mean, they had. I think they had pretty good earnings, but in the end, I felt like they were going to sell it off anyway, right? So they're going to, you know, the stock's going to sell off, and then they're going to find some excuse. I think they were talking about some margin this time, but it is what it is. So let me actually talk about a couple of the stocks that had earnings. So, you know, I've been talking about these momentum stocks, and every one of these momentum stocks basically, after earnings, if you basically sold them, shorted them, you know, whether you did it with stock or bought puts, you would have made money. But today, looks like that trend is not continuing. So Solar City had pretty good earnings, and looks like they're up a lot. GMCR also up a lot, and then Zillow also up a lot. So for those guys who you know, I was kind of mentioning that instead of playing the earnings, you should just play after earnings. My thinking is still, like, I wouldn't do it today maybe, but I definitely might be interested in shorting these stocks afterwards, right? And the ones I would short are companies that definitely do not make that much money. So I think Zillow, I don't know what they announced, but they might have made a penny or they might have broken even. And these stocks, to me, are pretty much a good candidate. And I can kind of show you guys overall why I think that. So why I think that is, let me actually go to this one. So this is the NASDAQ. And let me see if I can, right. So you see NASDAQ here in 2000 when it crashed right here. I think for most of you who've been trading for a while know what happened. It went to 5,000 and then it just went straight down afterwards, right? Let me actually go to specific date. And sorry if I'm I'm going to do the weeklies. All right, so what you're seeing is this is the NASDAQ composite. This is year 2000, right? Year 2000, I remember this day, March. Basically, I was buying some stocks, and every stock I bought was pretty much doubling. But right around here was the top, right? So when it hit 5,000, it tried to break it a few times, and then boom, it got shot down sometime in April. It got shot down to like 3,500. So it basically lost like over 30% from March to like around beginning of April or something, and then in June it actually almost touched 3,000, right? So you see how, and this is a NASDAQ, right? So you see how like this happened in 2000, right? So this is what happened in 2000, and then I'm going to show you the overall market, the SPX. So the SPX, even though in March it didn't make a new high, it actually made a high in April, and in June it was actually still okay, right? And it wasn't until September it started going down. So you see how like all of the growth stocks and the crazy names were selling off first, right? So they were selling off first. They were selling off first, but while they were selling off, SPX was making a new high because people were probably rotating into safer stocks and getting out of the growth stocks, right? So even in October, you can see how it was pretty much still at an all-time high, and then basically it sold off in the next 8 or 9 months, right? I'm going to go back to the comp. And NASDAQ sold off in March. So in March, it just started selling off, and in June, it was almost to 3,000. In September and October, it recovered, but it was still down 16% from its highs, and then boom, it went down with the market. So like they sold off first. These high beta stocks sold off first, while they were selling off. In the beginning, the SPX was making a new high, and then basically, this is what you got afterwards. So afterwards, basically, the whole market went down, right? If I were to do this today, so you see how it's like 4,300, and then it's at 4,000, right? So was that like, it might be slightly less than like 10%. But while this is going down, SPX is actually almost ready to make a new high, right? So so like the similarity on that one was kind of interesting, and it's worth keeping an eye on. Now, I'm not saying the same thing is going to happen, just so you guys know. All I'm saying is it's interesting to see how the market sold off and which one sold off first. So basically right now there's a rotation going from growth stocks to more stable stocks, which is I think what happened in 2000. But then after they did that, and if the economy doesn't improve, basically it starts going down, right? So, so just for you know, basically, it was interesting, so I thought I should make a note. I'm not saying that's exactly what's going to happen again, but it was just interesting, and I think if anything, if that case is true, every bounce on these growth stocks should be sold, because right, you kind of know that this is going to happen most likely, right? So they're going to take the worst of the beating. So we'll see what happens exactly, but you can see right here. So every kind of rally or retracement, if you sold it, it would have done pretty well. Remains to be seen whether that's the case. Now, sometimes I look at historical chart that's longer. So if you look at the Dow since the beginning, right, you see this chart. This is a crash. Then it took pretty much like decades to recover. And then in the 60s, it consolidated, didn't really make any move. And then in the early 80s, it had that bull run, right? So early 80s, even counting this 87 crash, if you look at it from 80s to 2000, Dow had a tremendous run. And then basically right now, it kind of consolidated for about over a decade, slightly over a decade, and then now it's starting to make a new high. It remains to be seen whether it's going to go up or if this is going to be shot down again, right? So if you look at this growth, that's pretty, this increase in stock market is pretty incredible. And for a decade, it was flat, so we'll see how it goes. They're always saying that we're flat for another decade, but all that stuff remains to be seen. If I look at the SPX, basically it had that same tremendous run in the 80s, 90s, and then right now it's here. So some people say, hey, it's consolidated for over a decade, so we're due for a big run. And this little run is pretty much nothing. If you imagine, like in the 60s, we would be like here. So there might be like tremendous more upside to go, or the other camp is like it's because this run is still not worked out. Basically, we'll have to consolidate even longer, and this might be another selling opportunity because it had a 5-year run, which is how long usually a bull market lasts. So that's my little commentary for today. I didn't have too many trading, so I had to kind of talk about some other stuff. Let's talk about earnings, because I'm going to combine the reports, because I think I only have time for one show today. So here on CBS, it's at the 61st percentile. The options are expecting or predicting a 2.2% move. The CBS stock actually moved 3.7% on the average the last 4 times. If you look at it, basically the order flow is heavily to the call side, but the net deltas and net premium isn't that huge, right? And in fact, the IV30 is actually down today. So, so here you go. To me, I'm not sure which way, but that's the report. Let's go to Symantec. So they do the virus. It seems like the security these days is pretty big on everyone's mind. if you look at it, looks like the biggest trade is selling the Mays and buying the Junes, right, of the 20 calls. So let me actually, so it's at the 85 percentile, so it's pretty high. It's actually saying it's going to move 5.9%. It's moved 8.0% the last 4 quarters. So a lot of times when I see this trade, for those of you guys who don't understand it, using this, you can actually plug it in. So you're selling the May 20s and buying the Junes, right? How many are you doing? 29.43. All right, so you sell the May 20s. You gotta punch it in, 29.43. And then this guy is saying he'll buy the June 20s, 29.43. Now, why is he buying? Well, one of the most obvious one is, and let me go to the chart tab, is this, right? So what he's saying, so comparison. I don't think I have the comparison in here for some reason. Let's show a spread chart. Okay, bear with me here. I am, so this 30 to 60, when it gets very, very distorted, so every earnings, you see how it gets distorted like this, where the 30 implied IV30 is much higher than the 60s. So if you were thinking that the stock wasn't going to go anywhere, and basically like after earnings, you see like both of them go down, but the lines kind of converge back together. If the stock doesn't move, it probably is a pretty good trade, right? Because if you look at the stats tab here, he's buying the 30 vol, right? And he's selling the 51 vol. So he's actually putting on a spread that's 21 vol points. And by clicking on the 30 and the IV60, you can see how the differential is over here. It's very similar to Facebook and Tesla. They were doing the same thing where they're buying the back month, the 60 vol month, and then selling the front month because the feeling is that it's going to collapse and maybe the stock is not going to move as much as you think, right? So that's why he's putting it on. If you look at the risk chart, so I punch it in this SIM. This is a simulation. It's one of the things that I use quite a bit when I used to be a market maker because I had so many positions and then I had to adjust it. But just so you know, if you click on the risk chart now, you will actually see the P&L, right? So I'm going to put it to next 8 weeks. They're pretty much going to expire after, let's just do 10. Let's see, did I put this right? June, yeah, June 21. So you're selling the front month and you're actually buying the back month, right? So what you're saying is you actually don't think the stock's going to move. So you make most of your money if the stock doesn't move. So you see how this your P&L goes up substantially on May 15th, just before expiration. So if the stock doesn't do anything, he's going to collect roughly 100 grand, right? And this line, basically afterwards, basically you would own a put if the stock stays at where it's now, because it's in the money, right? If for whatever reason it doesn't get exercised, then you would have a call spread. So a call. So basically, just so you guys know, if Symantec is below 20 after expiration, then you have a call. just naked call. But if they actually do get exercised in the money, you basically own calls and short stock, which is same as owning a put. So this is saying if the stock stays right now, this is going to be your scenario. Afterwards, you're just going to own the put, right? Maybe that's his idea, is that he would like to own the put, but he rather not, he would like to get this this front spread going. So he actually, by doing the time spread, he's actually front spreading the front month, right? So his break even is like 1856 to 2162, right? So that's what, 19, 20, 21, $3 range is where his break even point is. And if I look at the chart, it's like here, and that's what he's saying it's going to happen. Which, you know what, I think it's a pretty good spread. You know, I wasn't really even paying any attention, but now that I look at the chart, it looks pretty tempting. And he did it by basically paying 14 cents, right? So the most, in his mind, he can lose is 14. Let me actually, so that's his thing, right? You can actually press sim to complex, and you can do that trade as well, right? But obviously, I'm not going to do 3,000 contracts. That's not really in my account. So I'm going to actually punch this in. All right, I'm going to clear it. So I'm going to do the same thing. I'm going to sell it, and I'm going to buy this. And let's see what it is. Right, it's actually 14 cents if you do it. So I'm going to do it like, let's say 14 cents. If I do it 10 times, that's 140. So if I do it, so I can probably do it about 50 times, right? 50 times, and what I'm saying is I'll pay 13 cents. So I'm doing the same thing he's doing. Oh wait, let me check the open interest real quick. Okay. So what I was checking was this open interest right here. See how it's less than 3,000? So I know he's opening this one. I don't know, right? So he might be closing and rolling into the other. But I'm gonna do this. So if I do it 50 times, let me see. Just so I'm right. So I think the max is 650. I'm going to send the order now. Right. So I'm working that trade. Not sure if I'm going to get filled because basically what this means is I would have to pay 96. Yeah, I have to pay like 97 cents and sell this for 84, which I don't know. Maybe it'll work, maybe it won't. But that's what I got. So I actually like this trade, so I'm gonna put it on. I wasn't actually intending on doing any trading today, but you know, it's like punching it in. It looks pretty tempting because I didn't really review these. So I'll go to the next one. Okay, so Ralph Lauren, it's at 93 percentile. That's pretty high. The calls are trading 2 to 1, but the average call to put ratio is 2 to 1, so it's not something that unusual. Ralph Lauren. So basically, it's saying it's going to move about 6.6%. Last 4 earnings, it moved 5%. If I look at the chart here, yeah, it's pretty high. Last 4 earnings, if you look at it, basically, if you bought the straddle, these are front 2-month straddles, you would have made money, pushed, lost a little, and lost, right? So apparently, if I were to take a guess, seems like, and I'm going back further even, it's a pretty decent chance that this is too high. These options, right? So you can maybe sell some. I'm not sure where, you know, where it's gonna go, but and you know, I might do some later, but it's a pretty wide here, so it's not even that great, right? So for those of you guys who like to trade, I mean, this 40 cents is pretty wide, so it's not, to me, not that great. If I look at this one, May 55s, one of the things that you guys can do is, like, you see how where it's trading, by just clicking on the volume on these stocks that have a wide spread, you actually see all the last trades that happen, right? So you know the last trades are basically going up at 490. So if you're gonna sell, there's no need to sell it at 470. Just put it at 490, and you actually have a good chance. I don't know if the other softwares allow you that kind of much information, but you can kind of see the ticker, and you can kind of see where all that trade went up. You can actually even follow the trade for the whole time. And then right here, you can actually see all the trades that happened during that time, right? So if you actually go 494 is the last one. Let's go to the latest ones. Yeah, so the latest ones are trading 490, stock trading 154.57, which is 67, which is about 10 cents difference, but it also traded 57 and 67, so this range, it's about 490. So you actually know exactly where you actually are getting off your option price. Okay, SSYS, stats, it's at 75 percentile, calls and puts are pretty much even, looks like a little bit short, and net short premium. Now this is a 3D printer, so I'm not sure, a lot of this movement probably already coincided with maybe some of the other 3D, and yeah, and they pretty much have the same characteristics. So yeah, so to me, maybe it's saying it's not, they already know kind of what's going to happen. If I look at the stats, it's saying it's going to move 7%. On the average, it moves 5.5%. So for those of you guys who understand 3D printing and know this SSYS stock, and you already kind of can predict where it's going to go, considering other 3D companies have already announced, this might be a good time to take some shot at selling something, because if you already kind of guess where it might go, one of the things I would look at, and I don't know too much about these companies, but you see how basically it's unched since the earnings report. If you can see this one, if you believe the same, maybe it might be unched as well, because basically all the news has been already built in, and the stock has sold off. So maybe if anything, there might be some upside surprise. But in the end, if you guys probably know more about this company than I do, but that's what it is. I'm gonna go to PBR. This is Petrobras. This is a Brazilian oil company. Looks like heavy call volume. Yeah, nothing is really sticking out to me. A lot of them is Jans and Junes. I know there have been a couple of people who've come on recently and think that basically the Brazilian market out of the emerging markets is basically overdone. So we'll see what happens. If I look at this one, let me see. So you see how there's a 30-60 vol. Sometimes if the vol spread is high, maybe it's indicating something. And this one, not too much. So that's Petrobras. Oh, I don't know if I said it. I think I did. It's moved. It's predicted to move 7% according to the option pricing. It moved 5.5% the last 4 quarters. Let me actually go to GOGO stats. A little bit more puts than calls. 91 percentile, slightly long delta and premium. Yeah, any of the near-term bet is basically the May 11 puts. Is what they're predicting. And for GOGO, it's predicting a 10.3% move, and basically it's moved an average of 9.5%. So that's about it. So I think out of all of them, which one did I do? I did a Symantec, right? Let's see where I'm at on this. So it traded 3,000 times for 14. Yeah, so I'm gonna put this in there. See if I, in the end, get filled. If not, I might raise it to 14. But yeah, that's about it. I am actually going to go to and present today at Silicon Valley Options Group. They were nice enough to invite me. It's one of Bay Area's oldest options trading groups. For those of you guys who live in the South Bay, it's probably a great place to kind of join, and it's a non-profit organization, and you can kind of like talk to other folks who are really into options and kind of get some ideas, because it's always better to kind of do it in a group than just doing it by yourself, because it's sometimes nice to kind of see if you can bounce some ideas. But anyway, I'm going to go down there today. It's from 6 to 9. I think they have it at the Elks Club. So if you guys are interested, just go to the website and see if you guys can join. But other than that, I hope your trading goes well, and I will talk to you guys tomorrow. Take care.